As you can see in the title, I'm getting straight to it. No BS. Not finna waste y'all time because I don't like mine being wasted either. I'm gonna show you a strategy that works. I've been using this strategy for years. You can pass your FTMO challenge, your MFF challenge. Let's get straight to it. So what I do sometimes, because I don't actually trade key levels all the time, I'm really more so of a 5-minute time frame supply and demand trader, but this strategy still works. All right, I don't not use it because it doesn't work or because it works less than the strategy I use now. It's just I found a strategy that I like better, so I use another strategy. But you may like this strategy better than the one I use. You know what I'm saying? Everybody's different. So first thing first, you want to hop on the 4-hour time frame. This is the replay mode, by the way. So I'm gonna show you what it would be like in real time if you were to do exactly what I say. So you would start off in a 4-hour time frame, right? And then what you're gonna do is you're gonna bring up the line chart. You don't want to use the Japanese candlesticks or the Hikinashi. You want to use the line chart, right? Because it's gonna make it much easier to identify key levels. So you're gonna take your horizontal line tool. You can find that by going over to the left side of your trading view, go to the trend line tools, pull up the little menu bar, go to the horizontal line, or you can use the horizontal ray. I like to use the horizontal ray just because if you use the horizontal line, it shows up on the entire chart. It goes indefinite, so I like to use the ray. All right, the ray is only gonna go from the point that you click on, as you can see. So what I do is I take that line and I put that line at key levels. I see here that we had a rejection at this level a couple times here, here, and here, and in this area as well. So I drew that line there. You can see that we had price reacting to this level as well. 1, 2, 3. Let me zoom in so you can see that. 4, 5, 6, 7, 8 times. 9, 10. Because look, it even, bro, look, see. So this is where we're at right now, right? So once you do that, and I also marked a level down here too, as you can see, price is rejecting for demand here. Boom, we got demand here, and price sort of reacted right there. Let me see. If you pull up the chart, if you pull up the candlesticks, it did react to that level here and there. Line chart is going to show that price reacted up here, but that's just because it's not taking into the account the wicks that are at the bottom of the candlestick, as you can see, obviously. So what is the moving average that I'm using? I'm using the 200 SMA, but we actually don't even need the 200 SMA for the strategy, so I'm going to take that out. Don't even need that. Literally, all you need is the chart. You don't need any tools other than the horizontal line or the horizontal ray. That's it. You don't need any indicator, bro. That's what makes this strategy so elite. It makes it so lethal, bro. Once you've done that, you're gonna come down to the 30-minute time frame. So let me go back actually. What you would have done on the 4-hour is wait for price to come to one of these key levels, but not just tap it. You want it to pass that level. So we actually got to close above this level. So you can now drop down to the 30-minute time frame and see what it's doing. You can wait it out and see if it's gonna reject this zone. If it does reject this zone, you're gonna be looking for buys or sells, right? So since I see prices going up, I'm looking for buys, right? Even though we are at a supply level here, I'm looking for buys, bro. I'm gonna show you why. So price is gonna start reacting here. I already looked at it earlier. Price is gonna start reacting here, right? So let's move forward. Usually when this happens, price starts to drop. Usually. That's usually what happens. But we got this strong bullish bias over here. I mean, look, we're creating higher lows, higher highs. As you can see, let me pull out my tool. We're creating higher highs, higher lows, higher highs, higher lows, higher highs, bro. So with us being on a higher time frame, we're not like on the 5 minute or the 3 minute or the 1 minute. That bullish bias is very, very strong. I'm gonna trade against it. I'm gonna trade with the trend and not against it. Now, if the market was looking very bearish and then we came to a supply level, then I'd be looking for sales. But I'm not gonna look for sales just because we're at a supply level when we clearly are very bullish here. I mean, look at this. Look at these candlesticks. Boom. You know what I'm saying? And you may say, oh well, what if price comes back down and wants to fill the gap? Okay, cool. That's why you set stop losses, bro. Risk management, man. Risk management. I see what you're saying, but that's why you set a stop loss. So what I'm gonna be doing now is dropping down to the 15, just so we can get a better look at things. And I'm gonna be looking for a nice opportunity to get in for a buy on a bullish engulfing candlestick. If you don't know what a bullish engulfing candlestick is, I'll show you. Or you can even go on Google, go on Bing, go on images and look it up and see for yourself. But I'm going to be looking for a nice bullish engulfing candlestick. This here would be a bullish engulfing candlestick, right? So you could have got in for a buy here. You want to give your stop loss a little bit of wiggle room. You don't want to put your stop loss too tight. You want to give it a little bit of wiggle room because spreads can take you out. Plus, there's a lot of manipulation in the market. You want to protect your assets, right? I mean, you want to protect your capital. Usually I go for a 1 and 2. So let's say hypothetically we got in right here. Let's see what happens. We would have won. We would have won that trade. Let's remove this and look for another opportunity. You actually could have gotten in here too, right? You could have gotten in here because we had a break of this. What do you call it? I mean, you can call it whatever you want, this wick or whatever. You could have gotten it for a buy here as well. Okay, you could have got in for a buy here. Set your stop loss like, I don't know, like right around here, which is a nice stop loss. I mean, it's below this consolidation here. And go for 1 or 2. Boom. We would have won that trade. You could have got in for a buy here at the break of this structure here, right? Clearly we had resistance. I'll draw the box. Clearly we had resistance here. Price came down and then price went back up, right? The aggressive way to go about it would be to enter on the break of this candle and then set your stop loss. I personally, I would set my stop loss about like right here, just because let's say we got into a buy here at the break of this candle. I would have set my stop loss not here but here, just because we do have support here, right? We got this demand. This is demand. This is also support. We got this support here, which price is more, which price may come down to retest, right? Rather than this and go up. You know what I'm saying? Like this, like price is more likely to come down here and go up than to come down here and go up. Look at this manipulation. We have a nice wick here. We barely have any wick on this, on these 15-minute candles. So this is the better stop loss. Plus you have a little bit more wiggle room, right? And then you could have went for 1 or 2. Let's see what happens. We would have won. We would have won. I can keep going. Y'all want me to keep going? Now we are approaching a key level. So if I see that we're approaching this line here, which is a key level that I drew up, I would wait to see price break through it and then retest, right? Because we know that the market loves to react to key levels. I would wait for a break and a retest and look for buys, or I would wait for price to react to this level and reject it, and then I'd be probably looking for a demand setup. Like for example, let's see, because we are very bullish. I'm not looking for sales unless you just like a super scalper. Cool, get in on a 5 minute or 3 minute or 1 minute. But I'm on the bigger time frames. I'm looking for big moves to the upside. So let's say price does one of these, right? And then it wants to retest it. Then it starts coming down, and then you could enter on a breaking candle to the downside, but that's a little too risky just because you have the trend going against you, right? So instead of like most people would be looking for sales, right? You don't want to trade like most people. 96% of people would be looking for sales. You want to do what the 4% is doing. You want to be looking for buys. You want to trade with the trend. The trend is your friend. So I'd be looking for a nice demand setup here, right? I'd be looking for a nice demand setup here and then getting in on a buy at the breaking candle. And then I'd probably be putting my TP at this level. I wouldn't place it above it because there's a good chance that price may come up here and then be consolidating. It depends on, a lot of different factors, the session you're in and things like that. But that's probably what will happen. You would see price come up here, consolidate for a bit, and then you get stopped out because the banks manipulate the market and they want to give their guys a second chance to get in for a buy at a discount. So I would go for a 1-on-1 in this situation when we're right at this key level. That's really the only time you want to go for a 1-on-1, in my opinion, is when you're near key levels. But if the market is very bullish or it's very bearish and you're not at a key level, bro, run it up. Go for a 1-2, go for a 1-3, or a 1-4. You know what I'm saying? Twin trade. Once your TP is hit, leave the runner without a TP. Let it run and make it bag, bro. So let's see what happens, man. We're gonna delete this. All right. I'm gonna show y'all exactly what I would do in a scenario like this where I see prices coming to a key level. By the way, I don't trade the 15-minute. I trade 5-minute now. But as you can see, we've gotten 3 wins off the 15-minute, and we didn't even need indicators. So it just goes to show how simple the strategy is, but how you can be profitable also on different time frames, bro. And this applies for different pairs as well, and SPX, US 30, gold, same thing happens. Crypto I can't speak on because I don't trade crypto. You see what I was saying? This is exactly what I was just talking about. I told y'all the banks like to manipulate. So they'll push price down here so they can get their guys a second chance to get in at a discount. Usually when you see something like this, that's an indication for a continuation to the upside. The banks had to drive the price down so they can get in at a discount and then run it up, bro. I'm telling you that's what most likely is going to happen is price is going to now shoot through this key level because we have this nice rejection candlestick here. So I would be looking for a close above. Actually, no. I want to see price come above this line, bro. This key level first. Boom. Just like that. Just like that. Now, it'd be pretty aggressive to get in on a buy at the break of this candle at a key level because, again, like I said, it could start to reject and then it could plummet. But since we had this nice rejection candlestick here, like I said, this is an indicator that price is just gonna fly up. So I probably would have took that trade on the break of this candle, to be honest. Now, if you did take this trade here, I would have. If I took this trade here, I would have set my stop loss around here. and I would have went for a 1-to-1. Again, because we are at a key level, I would have went for a 1-to-1 instead of a 1-to-2. Now, even though we had this nice rejection candlestick here, which is an indication of a continuation to the upside, again, we're at a key level, so I'm not going to go for 1-to-2, 1-to-3, or 1-to-4. Let's see what happens. It looks like price is respecting this key level. It looks like price may shoot up. Let's see. This is an opportunity now for you to get in on a discount. No, not a discount because you already entered here. But this is an opportunity for you to get in on a second position. So you could have gotten in on the break of this candlestick. Let's act like now we're in two positions. And we're in a 1-on-1 because remember, we're at a key level. We almost won that trade. And the reason why I got in for a buy at the break of this candle here for a second position is because price rejected this key level, creating support. And it also did that, I don't know if you noticed, but it also did that at a demand zone. See? This is demand, bro. This is a nice demand zone. We didn't even have the wick close. We didn't have a wick go below this zone. It hit this box a couple times, and then we had a bullish candlestick close above that zone, and then we had an opportunity here to get in at a break of candle, which I did. All right, and let's see what happens. So remember what I said, price may want to consolidate around this zone. Remember, I said that. Remember. Now, we haven't been stopped out yet, which is because we gave it some wiggle room. Let's see what happens. And we got stopped out. And that is why I go for 1-to-1s around key levels. That is why I go for 1-to-1s. But we got stopped out, which is fine because when you have proper risk management, losses do not bother you. So when you going for 1-to-2s, 1-to-3s, 1-to-4s, and you're only going for 1-to-1s around key levels, bro, if you ever lose a trade, well, you will lose trades around those key levels. It's not gonna bother you, bro. When you take a loss, just step away from the computer, go do something else, and hop on the markets the next day, or back test and back test. And that's it, man. I mean, that's really it. That's all I want to show you guys. We almost won this trade. We almost won this trade. You know, I mean, if you're a super conservative trader, you could have even trailed your stop loss, which would not be a bad idea to do since we are at a key level, and we know that at key levels, price likes to react to it, and it'll either reject it or break through and respect that level and shoot to the downside or upside. But yeah, man, that's it. You have a blessed one, peace, and out, stay safe, and let me know what you think in the comments. I'm out.